Hi there, Fabian Klaus here from the Ghana Revenue Authority with a quick tax calculation to help you find out how much money you're actually getting back from this mortgage interest relief. Let's break it down. So mortgage interest relief works by offering a tax rebate based on the interest you pay on your mortgage. And if you're building a home for the first time and you have a mortgage from a licensed financial institution, you can qualify for the relief. This relief is administered by the Ghana Revenue Authority in the form of a tax rebate or refund, as we know. In a way, the Ghana Revenue Authority is basically saying, hey, congrats on your new home. Here's a little tax break to help you pay for all those expenses you saw coming. However, it seems as though not everyone fully understands what this means from the bottom line.
The money that I have to get in mortgage relief come up to 1.something million. The money that I receive from GRA is $218,000. You know what she's telling me? That my income tax from my workplace, that is what I get back.
To fully understand how mortgage interest relief works, you need to read Section 20A of the Income Tax Act, Chapter 8101. It says that in ascertaining the chargeable income of an individual who was resident in Guyana in the year immediately preceding the year of assessment, there shall be allowed a deduction of the interest paid on a housing mortgage loan owed by an individual to a licensed financial institution or approved mortgage financing company. Now, if you didn't quite understand, you should at least know what this part means. In ascertaining the chargeable income of an individual, there shall be allowed a deduction of the interest paid on a housing mortgage loan. So here's the deal. When you're calculating your taxable income, you are allowed several deductions. These deductions reduce the portion of your income that's subject to tax, helping you to keep more of what you earn. So these deductions are the income tax threshold. This is the basic income amount that isn't taxed. NIS contributions. If you're an employee, what you pay into NIS gets deducted. Business expenses. For the self-employed, all business-related costs are deductible. Personal insurance premiums. Payments made to insurance companies also count. Mortgage interest. If you've been approved for mortgage interest relief, the interest on your housing mortgage loan is another major deduction. Now, there are some other deductions. Just cruise over to Section 16 and 20 of the Income Tax Act to see these deductions for yourself. Understanding these deductions is key to calculating how much you can expect. So here's a simple calculation to put things into perspective. You may need a calculator for this one though. So imagine you're a teacher earning $2,500,000 at the end of the year. And during that time, you contributed $140,000 to the National Insurance Scheme, NIS. Now, when you're calculating your chargeable income, you are allowed a few deductions. The income tax threshold or personal allowance of $1,020,000. Why $1,020,000? Because this was the threshold amount for 2023. Your NIS contribution of $140,000. This leaves a balance of $1,340,000, which is then taxed at a rate of 28%. So the total tax you've paid for the year comes to $375,200. This tax would have already been deducted by your employer and sent to the Ghana Revenue Authority. So here's where it gets interesting. Stay with me now. Let's assume you've been approved for mortgage interest relief and the bank sent you a statement showing that you've paid $290,945 in gross interest on your mortgage for that year. Now, when you recalculate your chargeable income, you are allowed to deduct the income tax threshold of $1,020,000, your NIS contribution of $140,000, and your gross mortgage interest of $290,945. This leaves you with a balance of $1,049,055, which is then taxed at a rate of 28%. This brings your total tax paid down to $293,735. But since your employer had already paid $375,200 in taxes on your behalf, you're eligible for a refund of $81,465. This refund reflects the deduction of the gross mortgage interest from your total tax income, which deduced the amount of tax you owed. Now, if I was moving too fast with the calculations, not to worry. You can see this video again on our YouTube channel or Facebook and Instagram. Remember, you have to be tax compliant to benefit from mortgage interest relief. This means that in addition to paying all taxes due and outstanding, you have to accompany your income tax return with your interest statement from the bank as well as your Form 7B slip or profit and loss statement in the case of self-employed persons. Find out more by calling the Mortgage Interest Relief Unit on 227-6060 extension 1040. You can also visit our website, check out our social media platforms to learn more.